I don't know what to do with traditional software companies anymore.
Dude.
I think that this is the way we can talk about it.
Yeah.
Um, yeah, I mean, I think the big I think the big topic right now is, and I literally just was grabbing coffee with a friend before we started recording. But I remember 3 years ago, like, I'm as delusional as the next founder. Okay, I am full of fucking founder
Totally.
delusion. Okay, I'm full of it, but I'm not stupid.
Yeah.
And the problem with being not stupid is that the only companies going public right now are going public that are absolute monsters, that are not figuratively defying gravity, literally defying gravity. They are going to space. Okay, like that's who's going public. so, so like the question is like, I don't. What happens to traditional software companies? I don't know what happens anymore. I don't know what happens. Like if you're running a $200 million software, by the way, I have like tons of friends in this category. They're running between a $200 and $800 million software company at 10 to 20% EBITDA, growing 30% year on year, 120% net retention. So like adding a little bit of new customer. Where do you sell that business?
Yeah.
Who's the buyer?
Dude, it's so interesting too, because like, so in the past you would look at, I don't know, let's say you're being really conservative and you want to look at an EBITDA multiple. And so you take a business like that that's really well
Yeah,
established.
sure. Like a 25x EBITDA multiple. Yeah.
Yeah, exactly. And so you look at that and you're like, okay, there's this business that does, I'll just use 100 million. So it's easy math, 100 million a year in revenue, 10% margin or 10% EBITDA on that. And so you're talking about 10 million a year in profit and you're going to put a 25x multiple on that. So you're going to sell it for 250. If you
To whom?
don't believe that that is going to continue to grow over time, which I think there's a lot of questions about that, maybe you can just gut that business in terms of like from a cost profile standpoint, maintain a lot of that revenue, maybe even grow it a little bit, and you bump that to say like a 50% profit margin. In that context, it still takes you 5 years to get your money back. And then you've got to believe that it's going to be at least stable beyond that time frame. Otherwise, it's not worth buying. So it's a really interesting problem. I think that's why we see like such a massive shift in the valuations of software businesses. But even with that shift, like if the worst case scenario were to happen and people just like start canceling en masse and everything goes to AI, there's no value in those businesses. So
I'm just even wondering at any price who buys them. Let's just say, Jeremiah, you could buy this company at 100 million. Okay, 100 million in revenue, 10% EBITDA. So you could just kind of like look at it and be like, I'm going to snipe this thing for 100 million bucks, right? Because your like friend down the road has like the ability to give you that $100 million to go buy that business. What do you go tell that friend? First of all, do you want to buy it?
yeah, I mean,
And
the
then,
price
and then what the hell do you tell your friend who's going to give you the money?
the price has to be low enough, right? Like if it were, I'll
How
just
low?
play this a little bit. Well, okay, so like let's take that example. Let's say a business is a $100 million a year business. It's been operating at a 10% EBITDA margin. If I was looking to buy that business, I would say I don't believe that business is going to grow over time. Is it possible? Sure, but I wouldn't believe in growth. There's some sort of trajectory, right? So like, where's it at in this trajectory? Has it been going up? Because if it's been going up, it's going to turn the other direction. So there's some amount of time that it takes for that to happen, right? And I don't know what that time frame is. There's a momentum piece. So if you have positive momentum, it has to go negative before you start to get into the revenue decline. And my belief would be that there's probably 2 to 4 years for that to happen, likely in this current context. Maybe that changes, but I think that's probably the window I would look at. If it's positive currently, if it's already negative, then who knows? And then at that point, it's like, okay, well, why is it only a 10% margin? Could you boost that to 50, 60, 70, 80? In software, those kinds of numbers are possible if you have the right cost structure. But if I was looking at that business, I would say, okay, could you actually get the cost structure into such a place where you think you could pay that off in 2 years? And then everything after that is positive. I'm not an investor in this context. So I can't say like these are the right numbers, but if it were me putting my money into something, that's kind of the way I would look at it, is like, do I think I can get my money back out of this in a couple of years? And if not, then I don't think I'd be interested.
Yeah, I just think the problem is that I can't think of who wants to buy these businesses. That's the actual problem.
I mean, I
It
would.
used to be the public markets. What?
I would. I mean, it's probably PE, right? Like somebody who thinks they can
No,
change the cost
no.
profile of the business.
What do you mean, dude? Have you seen what's happening in PE for software? Did you see what happened in Medallia?
I did not see what happened in Medallia, but I don't know. It ultimately
It was
comes
a
down to
$5 billion write-off. Dude, PE is not
five.
supposed to put up zeros.
Yeah, okay, but they bought it under different assumptions. I think if you buy it now, you're buying it with a different expectation of what the future looks like.
Okay, but you still have okay, but your PE fund exists, right? As it exists today. So you can say anything you want to about the new assumptions about the new companies that you buy. You can't like magically change the whole world. This is like the whole problem. The whole problem is like the PE fund has the traditional PE fund who buys software companies has their existing portfolio. They have taken on a bunch of debt. That debt was what's the interest rate? The interest rate doesn't seem to be going down a whole lot. Leverage is expensive. So you're going to now lever against a thing that you're not sure about how long it's going to grow.
That's true. I think your only real shot is like if you're raising money now with a different thesis and a different expectation, and even then you have to be very aggressive on what you think the payback window is on that money. The interesting part though is like I actually still think that a well-run business, so like a Monday.com, like they're down what 80% or something like that from last fall. I don't even know if they're well-run. All I know is the headline stock price, but like I'm just going to use them as an example. They're deeply embedded into businesses already. They have good revenues. My understanding was that that isn't actually revenue based at all. It's just based off of like market expectations and all that decline. Um, in a context like that, that business can probably figure out, if it's well run, can figure out a way to change the business enough that it can continue to generate revenue into the future. It probably has to look like a different product, different like lots of things have to change within that business, but it doesn't mean that business is going to go away necessarily. And so I still think there's a lot of these businesses that will survive. The problem is which ones, and nobody really knows the answer to that.
This is a good point though, like, because one of the things I guess that's still an advantage for, traditional software businesses is the revenue quality could be good still, right? We're churning, right? We're churning, but we're scrappy and we're small and we're trying to do stuff like more efficiently. But like, if you're deeply integrated into the businesses, like Monday is so deeply integrated, like ClickUp, Slack, eh, Google Chat exists. Yeah, I think it's better than Slack. No one's churning from Slack to Google Chat. And it's free. Google Chat's free. And it's like so well integrated with Google Suite. Everyone's using Google Suite for spreadsheets and Google Drive and this and that. They still won't churn from Slack because they're just so built into Slack. And Slack's just chat. It's just instant message. It's not like Monday or ClickUp where everything is in Monday or ClickUp. I don't know. I think what do you guys think? Do you think the traditional software can be a little less scared just because the revenue quality of software businesses is so good? No?
No, I think they should be scared shitless.
I
what kind of a joke? Dude, what kind of an... I mean, it's like you don't know me. We come on this podcast every week.
Right.
No, I also agree. Like I mean, for what it's worth, like I see people who run software businesses that seem to have zero concern about what's going on right now.
I mean, if you think about everyone,
dude, Jack. Okay, look.
Sorry to cut you off, but like, if you think about everyone who's come on this podcast who runs a traditional software business, right? All of them are kind of still okay and doing very well. Like I would say, actually, not just still okay, they're doing very well. And maybe this is just before the apocalypse, but like almost everyone we've spoken to is doing fine, right? And trying to shape their businesses, still trying to shape it, still trying to think, how do I make my product have AI features, have native AI products, or actually function within Codex or Claude? But they haven't done it yet. And they're growing, right? But they're small, right? We're talking about small people, right? And I imagine they're experiencing higher and higher rates of churn. I don't know what the runway looks like before it starts to get painful, but like my understanding is that our friends are okay, right?
I don't think our friends are okay.
No?
Let me tell you that what they say on a podcast is not the same as what they say on text. I'll just say that because I'm not trying to like say anything about any particular person, but I first of all, I promise you that. The second thing I'll say is, look, this is like not a dig at Replo in particular, given that like some people who like in the SMB world who use us or who historically used us will compare us to them. Did you see Cody's tweet that said like just use Claude?
Yeah. I was just pulling it up.
That's the correct answer. Just use Claude, right? That's the correct answer. Okay. Now, again, Cody's ahead of the curve, but that's the right answer. So it'll take some period of time for everyone else to catch up. What does a company... Let's just pretend it's someone else because I don't want anyone to think like I'm purposely pitting it. Like I also, by the way, anyone who uses us as just a page builder, which at this point should be 0 people, but anyone who uses us in that context should also not do that. So I just want to be clear that I'm not like trying to make like a dig point. I'm actually trying to make like a strategic point or take let's actually use someone else because that way it disavows the particularities. Wix. What is Wix trading at right now on a revenue multiple basis?
I don't. Isn't it like less than 1, like 0.7 or something? I saw something, and they also have record revenues, right? That's on increasing revenues.
And Jack, they have the AI version of Wix. They have base 44, and it's at $140 million run rate. It went from 0 to 140 in 2 years. So they already have the AI version of it internally. They're executing, they're executional animals, essentially, right? Trading at less than 1x. Why? Because of this thing. Like,
because
by the way,
even base 44 isn't future proof.
Exactly. Dude, we just rebuilt our website on Claude. Like Fermat's website is being rebuilt on Claude by someone who has never coded in their life.
I'm embarrassed about how long this took me to pull up, but hey, we got there eventually. Yeah, no, it's crazy, guys. I mean, the amount that you can do with Claude and so quickly as well. I mean, I remember I showed you guys the landing page that I built with Claude. That's like old news already. Like the landing page did well, and you know our brand is growing and we're tiny, but it's like whatever. But yeah, I've been playing around with how you can use Claude to do landing pages even better and than what we saw, and it's just incredible what you can do. Let me see if I can quickly show you this. I used to be a Replo shell, right? I used to be like, Replo's amazing. You know, I really liked the appeal to authority, right? Oh, you can replicate these high converting landing pages from other brands and then obviously, you know, adapt them to suit your brand. Because assuming that those teams at like, I don't know, Groons and Olipop or whatever it happens to be, have the best agencies and the best marketers, and they've tested, you know, ruthlessly. They have a pretty good, accurate picture of what the market is buying right now, and then you can go and replicate that. That's not really what Replo does, but they have like a template library and whatnot. I'm not sure what the product looks like today. This was like 2 years ago. But now you can just do that in Claude, right? You can, and you don't have to be smart. You can just like ask for it. You can say, hey, go take this Groons landing page from their like highest impression ad in Facebook ad library and remake it for me. Let me see if I can show you this quickly, because I did exactly that. And I asked it to make it very customizable so that I could change it and make it suit like whatever I wanted to use it for. And look at this. So this is in Shopify, and all of these are Shopify sections. So I can edit them. I can be like, okay, this, I don't know, the CTA. You can change the banner here to say, I don't know, never sold one of our gummies. And I don't know, make it red. So it's not just like dumping raw code onto the Shopify store. It's fully customizable to match the brand that's replicating the page for their purposes. So yeah, I don't know why anyone would use Replo now, you know?
It's interesting because when I started getting into coding, it was probably like 2010-ish, 9, 10, somewhere around there. And like the way that you did things, if you didn't know what you're doing, or actually even if you didn't know what you're doing, is you'd go to a forum and you would copy a code snippet and you would go and add it. It was a template, right? That's ultimately what it was. It's like you would get this template and you would modify the template to do what you needed it to do. My first business in selling software was WordPress extensions or WooCommerce extensions, which was basically a template. It was code, a file of code that you would go and you would install on your website, and then you could make some modifications to it. And that was the way that we shipped things for a long time. And basically, you needed somebody who understood the code well enough and understood the logic and stuff behind it to be able to like take a template and make it better. But Gen AI is so much better at that, because ultimately, like, it has all of this context, all of this knowledge, and it can just give you the perfect, maybe not perfect, but as close to perfect of a template to start from as you could get. It's a way, way better version of, like, in the past, I would go and manually pull these different things, and it would take me a day to figure out how to do this thing. Like, building a landing page like that literally would have taken me, like, pre-Shopify, all that kind of stuff. It's like a day of work if you know what you're doing to go do that. And I'm copying code snippets I have saved from this landing page I did in the past. Like, when I worked in an agency for a while, that was what we did too, right? It was basically just like, you build up this library of sections and you go and you add those code sections and you modify them to meet the needs. And Gen AI is just so much better at that than any other thing has ever been.
Well, I mean, if you put the appeal to authority side to the side, just the time to product is so much faster, right? You don't need people. But then if you reintroduce the appeal to authority, it's something like Groons. Groons is, they are not like a legacy player that has like came onto the space and, you know, done incredibly well. They came on so fast, they came on so aggressively. They're expert operators, right? And they disrupted, right? I think within months they had like AG1 posting ads that said Groons alternative, right? So they just completely disrupted so fast, and they've done so incredibly well. But even then, they're spending so much money on landing page experts, on web designers, or whatever it happens to be, and some of those landing pages don't become their top converting landing pages. They don't carry the brand through revenue ranges, right? But if you're able to identify exactly which landing pages are doing really, really well and then replicate them in minutes, right? This just, it does what Shopify does before. It lets people compete on almost a level playing ground. You now don't need the army of experts testing different pages, right? The experts at Grooms, for example, they'll launch hundreds of pages, and most of them won't get very much performance, but they're still the best in class, right? But those top pages, now anyone can have access to them, right? So, kind of the promise for Shopify making website design possible in the first place. I think it's incredible. I'm so excited. I think, but I do worry about software businesses like Replo. Do they survive just because they're so integrated, or do people genuinely just go, I don't need this anymore, I've got Claude, right?
I mean, it's no different than it's always been in software. It's just that this is accelerating, which is like you have the ability to, maybe no different isn't the right phrase, but there's always been disruptors and startups that come in and they do something different, better, faster, cheaper, whatever. And that's your little piece of competitive advantage. And you go after the incumbent, and eventually the incumbent falls off. And then that, whatever that startup is, becomes the new incumbent. And then somebody comes and takes their spot eventually. And AI is just doing that. I just wonder, there's still always there's a path to incumbents existing. Rishabh, I'm curious what you think about this. Like a Salesforce, for example, is not a piece of software I like to use, but it still exists and it has a very big place in the ecosystem, even alongside all these incumbents that these disruptors that have come up over the years. And I'm curious if if you think we'll still see some of that in the future, where there are players that exist that have been around for 10, 20, 30, 40 years, because there's a segment of the market whose needs they meet. And then everything else is kind of like these either AI powered startups or just fully AI or whatever that is.
Okay. I mean, I think so just really quickly, we can tie a bow on this. Will people continue to use these other things? I just struggle to see how that happens over some reasonable period of time. I think the existence of an incumbent has less to do with people will continue to use the thing the way that it has previously existed, and more to do with that incumbent actually changing how they operate. And Salesforce was one of the first to of the larger companies to become headless and become MC. I mean, dude, they became MCP first before House, right? Olivia's going to come on. House is a startup, and House announced their MCP 2 days ago, and Salesforce announced that they're going to be headless 2 months ago. So, who's moving faster, right? I think that we shouldn't just assume that because you're the incumbent, you're slow.
Right.
There are incumbents who are really fast and who are going to be winners because they're shifting to what the new reality is. So that's one comment. The other one is, I think that there are certain workflows that are much more likely to fade away slowly, but they're still going to fade away. And so then it comes back to this strategic question, which is what do you do with the business? Do you just run it while it slowly fades away? Do you try to sell it? Who buys it? Ultimately, we as humans have to operate this business, or we have to not, and we have to find something else that we decide is better for us to do. Yeah. So I don't know. I think that that's a much harder question. It's just will humans bother with businesses that are not eventually going to make it, basically?
I guess or one thing that seeing all these posts from these incumbents that are moving very quickly, I'm realizing is that the things that you guys have been sharing are literally the future of these fast-moving incumbents, right? You were saying this 2 weeks ago, right? Flattened organizational structure, fewer layers, faster decisions, right? And now it seems like pretty much all of the incredible, like you were saying before, the businesses that are going public, that are going to space, they're all doing it. They're all doing exactly all of these things, right? I think it's super interesting to see it play out, but it's also interesting to see the things that we haven't talked about in some of these announcements, right? The one in here that I think is really interesting from Coinbase, from Brian Armstrong at Coinbase, is this idea, and I saw Jensen from talking about this as well, is the idea of AI teams, right? And just one individual that runs an AI team. I'm not even sure if it's in this post, actually. Yeah, there we go. We'll be concentrating around AI native talent who can manage fleets of agents to drive outsized impact. We'll also be experimenting with reduced pod sizes, including one-person teams with engineers, designers, and product managers all in one role. I mean, part of this seems almost optimistic, very, very optimistic. But also, I mean, it's happening. It's already happening. A lot of startups have these people in their teams, and I imagine that this is, a very real role in Coinbase today, right?
I mean, it's interesting. There are people out there with these skill sets, right? Like a couple of my startups that I've had in the past were me, just like writing the code, talking to customers, being the PM, like all of that stuff. I literally did every single function in the business. I was a solo operator who knew how to do all of these things. If I had AI, I would have moved so fast because I knew how to do all of those things. And now it's like I manage basically, so it's a little bit different. But in that context, I think if you could take somebody who has those skill sets and just say, go for it, like, here's your job, go figure out how to do this thing, they can move so fast now.
Yeah, Jack, just so you know, we're doing this.
Right.
By the way, the crazy thing organizationally that happens when you do this that is a little bit missing, but it started to get talked about in the ClickUp note that got sent around yesterday. It's going to do a few other things. So the first thing it's going to do is you have to start to teach your team how to think about career advancement in the context of impact, where that impact is driven by their ability to manage like a larger and larger fleet of agents with higher complexity and higher context. So it's like you're just going to grow in context and complexity, and you're going to be able to have agents that do the work for you. Okay, so fine. So that's like one thing, as opposed to managing people, which is like traditionally how we told people that they would advance in their career. The second thing is that you have to now compensate on that. And so we are going it doesn't matter if my team hears this because we're going to do it. But we're going to like change our comp structure such that it's going to over reward people who are able to do that most effectively, both in cash and in equity. And so the outcomes that people like, the way people will think about their job, their impact, their growth, their compensation growth will be directly related to their ability to drive impact with AI, because yeah, it kind of turns out you can do it. I'll give like a micro example. Oh, go ahead.
I was just going to ask, do you have you already thought through like the levers and mechanisms of that comp increase? Like, what are the inputs that determine whether comp goes up in that context?
I think that you, in this situation, can literally pick business objectives. You can just say, people who move the needle on our business objectives directly on their own will get overcompensated. And I think you can literally say that, because unlike in old times when you would say like, oh, you're responsible for this like sub KPI that ladders up to this overall company goal, you could literally just say like, no. I'm going to make up something, right? I'm trying to get $10 million customers. And someone can just say, okay, great. I'm going to go find a way to get $10 million customers. Right? Or it's like, hey, we need like a product that accomplishes X. And someone can just say like, I'm just going to do the whole thing.
Nice. Yeah. I mean, this is already the way that sales roles work, right? Commission-based sales roles, right? So why shouldn't it be proportionate to impact in the business, right?
No, it's not the way commission-based sales roles work. This is the issue. See, commission-based salespeople, what they do is they say like, oh, I need marketing to do this. I need someone to build this asset. I need someone to... No, but they all still say like, oh, but I need this from product. I need this from marketing. I need this. Like, they all still say, I need someone else to do something. And what I'm saying is, if you don't say that, and instead you just do it, you will be overcompensated.
Right.
Because now you can just do it. Do you see what I'm saying? Like the nuance matters. Yeah.
Mm.
Or like an engineer could just say like, hey, I'm just going to build a product and like send it to a friend of mine and like see if he'll pay me $1 million for it. And it's like, okay, well, I'm going to over reward that, you know?
Right. Incredible. Yeah. I want to see what you guys think about this. I mean, this kind of ties into what Brian Armstrong was saying. I actually don't know if there's any difference. So we'll watch the video again and see if he says anything different in this video.
Potential to automate many aspects of human labor very soon.
And
I'm curious the degree to which you feel a responsibility for making that transition go well.
What AI will do is to make tasks that we do in our job more efficient. Our job is not to wrangle a spreadsheet. Our job is not to type into a keyboard. Our job is generally more meaningful than that. I'm fairly confident that AI will drive productivity, revenue growth, and therefore more hiring. There's a belief that the world's GDP is somehow limited at $100 trillion. Well, what's likely to happen is AI is going to cause that $100 trillion to become $200 trillion, $300 trillion, $500 trillion. There's no fundamental limit to the size of GDP. And so the number of people in the world that is participating in this GDP, and $100 trillion GDP, is actually quite small. And so what if we brought the rest of the world, the rest of society, the rest of the world's population, empower them with AI, give them the opportunity to participate in the GDP, and cause the GDP to quintuple? I think that's very likely, yeah. And it's very likely. that companies will become more prosperous. But it's for certain. This is for certain. Everybody's jobs will change as a result of AI. Some jobs will disappear. New jobs are created. Everybody will have to use AI, because if you don't use AI, you'll lose your job to somebody who.
I just remembered that this is extremely uncontroversial. There's nothing to talk about here. That's the wrong clip. Let's see here. Maybe it's this one. Or do
people, and they are smart. And they're saying, oh my God, there's going to be no more radiologists because, AI can read x-rays better than radiologists can. There are going to be no more software engineers because AI can program better than a software engineer can. These people are wrong. So what's really going to happen is it's going to elevate all of these people. And it's like you've been digging, let's say you're a software engineer, right? What the analogy I give you is you've been digging out a basement of your house with a shovel, and somebody's about to hand you a bulldozer. You should be so happy if you're digging the basement of your house and somebody says, hey, how about this? I have a tool here that's going to, and what's really going to happen is we're going to have so much productivity in our economy that, for example, this is one effect. A lot of people who have two earner income households, right? One of the people is going to drop out of the workforce. That's why we're going to have a labor shortage. People, because of the productivity gains, you're going to be able to afford things. We're going to have, I predict we'll have to have deflation of certain core, assuming we let this technology play out and don't hamstring it with regulation too early. We will actually have, everything, food will get cheaper.
Okay, so I don't know if this one's very controversial either. To me, these are both obvious. I'm not sure if there's much that we can expand on these. Yeah, it's pretty high level.
I think the only comment I would make is that what Jensen's point is like you will lose your job to someone who uses AI is not fully appreciated by people. I don't see the usage of AI with the level of urgency that one would expect if you were actually worried that your job was going to be taken.
Right.
Not even close.
Right. I mean, I think
why? Yeah, which is like a wild thing, right?
From an attitude point of view, if like somebody on your team heard, wait, I can be compensated more for having more of an impact on the business goals of Fermat, right? And they felt like they were getting left behind. They felt fear or, whatever emotions they feel, but they don't actually act towards it. And I'd say that's the wrong inclination. It's an opportunity, right? An opportunity to have more impact, to dive in. You were talking about your executive assistant trying to find ways to make all of her job done by Claude. That's incredible. That's the sort of approach that you want. And I don't know if you can change, hopefully you can, right? Hopefully you can take very talented people and give them the right information that puts them on the right track, right? So that they aren't wasted by some sort of like weird political persuasion that like, oh, we should burn data centers down, or AI is this massive red light and this massive problem, and they actually become more powerful and become more effective and achieve the business goals that their roles are built for, right? Just changing over time. But yeah, I'd be interested to hear from you guys what's worked at your businesses, like getting those people. Sometimes I don't want to call them Luddites, but kind of getting those people who are talented but are apprehensive, or they're slow, they're not early adopters, right? And they need that encouragement. What's worked for you guys in bringing those talented people into being AI first?
You got to show by doing, because it's not like any of us knew how to do this a week ago.
Right.
Did I tell you about this like bot that I built to give feedback to my team? Did I tell you guys about this? Okay. Yeah, the only comment I would make is like, so now other people are building similar things. It's only a handful of other people. But if you don't do it yourself and show people how to do it, then like, why would anybody else think that that's like, you can't say, I expect you to do it and then not uphold yourself to that same behavior.
Right.
Because the issue is that it's not like you did it 3 years ago and now you're expecting someone else to do it, because it didn't exist 3 years ago. So you have to do it at the same time as everyone else is doing it, which is the new part of this. But you do have to do it and show people. Like, you have to model, basically. Yeah.
Yeah, I agree. It's all about modeling, I think. Like the interesting thing, that example of your bot, right? You're modeling one thing there, and that one thing is probably not like an engineer on your team probably doesn't see a whole lot of utility in doing that for themselves. They've got other things they're working on, right? So for them to see the impacts, that they might look at them and be like, oh, that's kind of cool, but like not really useful to me. They need to see something that's useful to them as well. So there's it's not just like modeling one thing, it's modeling lots of different things, lots of different people modeling things. And I think that's how you get people to understand and to be able to engage better. So, and that's true for us too, right? Like a lot of the things that I do with AI are things I've seen someone else do first. They're not things that I did first. I'm just seeing an example and saying, oh, that's cool. I think I can go apply that over here. And then I go use that thing.
Yeah, the only thing that we're trying to potentially teach people is the behavior, right? Which is like, hey, don't be afraid to just do it. And don't assume that it won't work, right? Like, this is where the like same founder delusion is useful, because it's like, we're kind of not most founders don't start a thing that is completely unknown without high comfort with like, I'm just going to do it and see what happens, right? And so that's like lucky that like, yeah, we don't know what's going to happen because we haven't done this before by definition. So we're just, but that's fine, right? It's like not a big deal.
Yeah.
So
Real quick on the macro stuff, I think one thing that's really going to be really interesting is how do people need jobs in the future? I like to work. I think I want a job, but it is interesting. Like over time, I mean, we all used to be farmers, basically, right? 200 years ago, you spent the numbers I was just looking at, like call it 90% of your work went to shelter and food. And now for the typical person, it's more like 50%, which is still pretty high actually. But it's half of what it was 200 years ago. And AI has the potential to maybe cut that in half again. And so there's like this, and not only that, but with the technology advancements, that money that's going towards non-food and shelter is so much more impactful. The things you're getting with that are so much greater than they were 200 years ago. I mean, what were you getting 200 years ago? Like maybe you're buying like pen and paper and you're buying some books and things like that. And now we've got these machines that do incredible things. So I think there'll just be like I could see overall wealth increasing. And maybe like the deflation thing is an interesting concept of what does that look like over time. I don't know if that'll actually happen. I think both of them are pretty optimistic on the future. I think there's probably more pessimistic views that maybe warrant some consideration at least, but I do think that there is like a very optimistic path potentially, where if we just look at the history of how technology has impacted just our lives in a positive way, it's been largely positive over time.
the last thing I'll say is like I was in Cincinnati last week. Did I tell you guys about this? Being in Cincinnati,
Yeah.
and it's like very
Different.
different. Yeah, I'm like, okay, so that happened, and then this week, my someone who I work with here was visiting from New York for the week, right? So I've been like asking folks from our New York office to come here. And I think like I've been trying to communicate to them that like even the difference between New York and SF is pretty big in terms of like AI adoption. And by the way, like our New York team is like pretty adoptive on AI and like is pretty up to date on how things are going. And we host this thing called like Claude and Cocktails and Claude, where we help other companies, or sorry, other people in New York, like get up to speed on like how to be effective with AI and things like this. But she spent a week here with people here and her ex-colleagues here. And she was like, okay, I get it now. Now I understand why you're being such, I guess, such a pain in the ass about like coming to SF, because it is even more different than I expected. And I think that that part of it is, not fully appreciated yet. I think like the pace with which SF is moving is really hard to understand. Really hard to understand unless you're here. And like you see how like a whole city almost is moving at the pace of AI, but then you go anywhere else in the country or in the world, and it is not the case that the whole city is moving at the pace of AI. And that is a very big difference in like how things will change. Yeah. And I think it creates an onus on like the people who are in it to as quickly as possible get other people in it too. Like I think that that job is significantly underappreciated. So there's these like announcements. Did you see the like deployment company by OpenAI and like all these forward deployed engineers getting hired all over the place, and the like deal that Anthropic did to create like a consulting arm? Are you guys seeing all of these things by any
No, I
chance?
didn't see that. No.
There's all these services businesses that are being stood up by OpenAI, Anthropic, like in order to like help enterprises adopt AI faster. The shortage of service offerings for people to adopt AI is so massive. I think it is extraordinarily under-discussed, and I actually think that one of the most important jobs for people who are in AI and understand AI is to make sure as many other people get on the boat as possible, as quickly as possible.
It's interesting though. If you're talking about San Francisco, I just think back to when I started working in software, SaaS, whatever you want to call it, 15 years ago, basically. Like San Francisco was the center of that then. The pace there was different then. The concentration of people who, I feel like that shifted a little bit with COVID and remote work, but at least at that time, San Francisco felt different than the rest of the world in that regard. Is this not just the same thing now in a new type of, in a new wave of innovation, or do you think it's different than it was with the way the world looked 15 years ago and San Francisco's place in technology at that point in time?
In that way of framing it, it's the same. But not unlike the other analogies that have been drawn, it is simply the case that the velocity and magnitude is like 4 to 20x higher depending on which number you look at. Because like the fastest growing software companies at the time did not add $14 billion of revenue in a month.
That's fair.
So like, again, depending on the number you look at, you know what I mean? Like, I don't know how to answer that.
It's an interesting time. Yeah, the way that I see it is a superabundance of supply to all sorts of different demands, right? That like typically, I guess, wouldn't be, your go-to for to be solved with software. I remember you spoke about this before, Jeremiah. You're now doing things that it didn't make sense to hire someone for leverage to go and do, but now it makes sense because it's like, well, it costs a few seconds of my time to get it done, right? And I just think that from big things to small things across so many different existing demand, we just have a superabundance of supply. So like air or information, right? We don't have a library of Alexandria, and we don't have to buy books, right? There is no scarcity of information. We have extreme competition because of such superabundant supply of information to provide us with that information, right? Before it was, Google, and Google search was like how people, found some information. You go and check a few pages to find that information. I mean, before it was books, and then before it like knowledge was extremely scarce, right? But now, all these companies are just competing to get you that information as quickly as possible. Not just get the information, but execute as well, right? It's not, hey, find me a hotel in this city and a restaurant, and and then I'll make these reservations with my assistant, or my wife will do it for me. It's, hey, go do it all for me, right? I'm going here, go do it all for me. And that's like I guess more recreational than like a business's demand, right, for a solution. But yeah, that's the way I of course it's deflationary. It couldn't be more deflationary, right? Yeah, I don't know
Yeah, I
what
think
extent it will actually be deflationary, because we have currency debasement as well. If it's measured in anything else, anything hard like gold, right, then yeah, we've experienced a huge amount of deflation, right? Things are cheaper in gold terms and hard asset terms than they ever have been, right?
yeah, that's for sure true. I'll leave you with one idea, and then I really do gotta go. But the one idea I'll leave you with is think about visiting San Francisco right now, like going to a different country to experience a different culture. And that's sort of like what I'm encouraging people to do, which sounds like a crazy thing to say. But it is worth spending like 1 or 2 weeks here and being like, what the hell is in the air here? Because I'm telling you, it is different. Yeah. Yeah. And I didn't fully appreciate that until like, yeah, people from you wouldn't think New York is like, doesn't get AI. But yeah, it's just different, right? And so what you're talking about, Jack, with like all of these impacts and like the abundance of it, I like you should come here to feel it, because it's like, okay, yeah, you can eat pizza, but then you can go to Italy and eat pizza.
Mm-hmm. Yeah, good point. Yeah.
Yeah.
Mm-hmm.
Alrighty, guys. I really gotta go. To see you
Catch you
soon.
later, man.
Bye.
See you.